Good afternoon, everyone, and welcome to TBR's Cloud Computing Changing the Labor Equation for the Delivery of IT Services, Insights from the Global Delivery Market Benchmark webcast, highlighting results from our Global Delivery Market Report published this spring. My name is Allison Crawford, and I will be your host for today's session. Technology Business Research's focus is to provide business research to accelerate our clients' success, and this webinar is part of these ongoing efforts to find new ways to support you and your business, helping you get the most out of your research investment. As we'll highlight during this session, IT services firms are expanding footprints and capabilities globally, with pockets of investment springing up all over the planet with specific technical focuses. TBR has been tracking the growth of this for the past 3 years and is pleased to present the findings from the 7th iteration of this study. This information will help IT services firms understand the opportunities and challenges of operating delivery centers across the major global geos and provide actionable insight into the market and competitive strategies that translate into competitive advantage. Over the course of the presentation, Principal Analyst Ramunas Svarcas and Analyst Hristov will delve into the trends driving the results featured in the study, followed by Q&A of these trends and how they'll affect you. Before I pass this over to Ramunas and Boz, there are a few logistics I'd like to cover. First, we're recording today's session and we'll be posting it on our YouTube site, TBRI channel. We encourage you to visit this channel to watch this presentation or any of the others we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Ramunas and Boz will address them at the end of the presentation. Or if you'd like to set up a client inquiry for more detailed discussion, please reach out directly to the analyst or myself at the end of the webinar to set up that conversation. Third, we'll send the slides to everyone registered for today's webcast within 24 hours of the conclusion of the presentation. You can also find these slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. And we'll share all these social media links with you again later. Now let me introduce Ramunas Svarcas, Principal Analyst in the Professional Services practice here at TBR. For the past 12 years, Ramunas has covered the IT services market here. The depth of his knowledge has helped our large services clients plan their strategic roadmap, increasing their profit margins and lowering their risk. He is joined by Analyst Hristov. Boz covers the global delivery market, cloud services market, as well as management consulting. Together, these analysts bring a wealth of knowledge and experience obtained through past and ongoing interactions with existing IT services vendors. The work on this report has been hailed as mission critical and strategic by the customers subscribing to it, and we look forward to sharing some of our insights with you today. And with that, let me hand this over to Ramunas.
Thank you, Allison. Before we get started actually into the presentation, just a quick overview of what the Global Delivery Benchmark is. For those of you that are new to TBR, or this may be the first time you're attending one of our webinars, our Global Delivery Benchmark is one of a series of benchmarks we produce on a quarterly basis. Other benchmarks are IT services, management consulting, BI and analytics, and we have a whole cloud program which includes 3 separate benchmarks. The benchmarks are an instrument we use to really compare and contrast the various vendors. In this case, for the Global Delivery Benchmark, we're really looking and focusing on 14 vendors in the marketplace, and the vendors are listed here on the bottom of this page that we examined, comprising quite a diverse group of vendors that are providing professional services to the IT market. The whole key here is to understand what they're doing from a global delivery standpoint. How is headcount changing? Where are people being added, subtracted? What's going on from that standpoint? Firms use us to figure out if they are following a trend, are diverting from what everybody else is doing, and or spotting potential opportunities where they may be strong and nobody's building out their resources in those areas. Certainly is an opportunity for them. Today, we're really going to be looking into the insights of how vendors are reacting to the dramatic changes in the IT landscape, specifically as a result of the arrival of the cloud delivery model. We know that commoditization of infrastructure has occurred across the board, and it's occurring to a certain extent in the services arena as well. And it's definitely had an impact on the IT professional services vendors. Specifically, today we're going to look at what's happened in headcount growth in 2013, ending in 4Q13. really, and taking it a little bit step deeper, looking specifically in the IT outsourcing arena, what's happening there. Certainly there's been a lot of talk and discussions from an IT outsourcing standpoint that opportunities have somewhat appeared to have contracted, revenue streams from IT outsourcing are declining, and or how are firms reacting from a global delivery and headcount standpoint to address those issues. And finally, we'll be discussing who's making money. The real key answer for every vendor firm in the IT services arena is how do you make money and how are you making profits. So with that, I'm going to turn over the presentation to Boz.
Yes, thank you, Ramunas, and hello, everyone. The first key area that we want to address today is really find out what happened to headcount within the 14 IT services vendors within the study in 4Q13 and overall 2013. If you could just move on a slide, please. So the overall services headcount continued to decelerate, and the key factor for deceleration in the headcount was the accelerated adoption of industrialized IT services model. As a slide, as a chart that presents on that slide is, there's two key areas and two key factors that cloud is impacting cloud services IT services headcount as well as revenues. While the cloud revenue is yet a small portion of IT services vendors' overall professional services revenues, it does impact the headcount and shift where vendors are hiring, shift their hiring practices across service lines. It also impacts their revenues. As you can see on the slide, the headcount continues to decelerate. It's not disappearing, but it's a very strategic hires that that IT services vendors are pursuing, as well as its impact, and the revenues actually decelerating faster than headcount, because as cloud delivery reduces the outlays, typically the funds are absorbed in the beginning of the engagement, and that stretches them over the length of the engagements and annuity streams, so that impacts the overall streams. So it's a twofold impact, a headcount reduction as well as the revenue reduction. You can move on to the next slide. So the next slide discusses the three groups of IT services vendors that we track in the study. System integrators with maintenance and support, pure system integrators, and India-centric vendors. The overarching trend is that different vendors are reacting differently to the changes of the IT services landscape. For the SIs with support and maintenance, both low-cost headcount and onshore headcount contracted, primarily due to restructuring initiatives and rebalancing workforce within the organizations. For the SIs, vendors such as Atos, Capgemini, and Xerox continue to play catch-up, boosting the low-cost expansion. The onshore headcount contracted, again, due to restructuring initiatives and rebalancing and to address the cloud demand. And India-centric vendors, they are certainly continue to attempt to climb the value chain and expanding their onshore resources. They are hiring at a slower pace in India. They are shifting towards nearshore locations that allow them to climb proximity. Move on to the next slide. The next slide gives you, it's more of a time, it's a time chart that gives you a good representation how the vendors combine across all the 14 IT services vendors in the study, the headcount shift. First and foremost, the onshore contraction continues, as you can see from 4Q12 to 4Q13. Primary reason behind it is that clients in mature markets are really changing from the run the business deals over long change the business type of engagement that is influencing hiring strategies for the IT services vendors. And while it's lower paced, the low-cost headcount decelerated. As I mentioned earlier, the vendors continue to add headcount in low-cost locations because we do fold the nearshore locations as well under that category. That's kind of the trend that we have seen in terms of vendors hiring in nearshore locations. Again, India it remains a key hub that drives that number. However, we see countries in Central and Eastern Europe like Poland and Hungary that are expanding at a faster rate in terms of adding resources.
Before we go on to the next slide, I just want to also point out that with this slide and the previous slide, we've seen that headcount growth continues to outpace revenue growth. Many people are talking about, okay, everybody's trying to break the linear trend in services between headcount growth and revenue growth. It has not yet happened across the board. We certainly see some vendors that are succeeding in that endeavor, and we'll cover that a little bit later on. But it certainly suggests that there is a contraction in terms of hiring. The contraction is partially due to what's happening in the industry from a cloud perspective in terms of how the cloud dynamics have changed the marketplace. But at the same time, you have external factors that are also influencing how headcount is being evolved and how global delivery models are being built. It's basically a take in that every firm that wants to really compete in the IT services field has to have a global delivery network and people distributed across the globe and being able to sort customers across the globe. That's where the big money is. Smaller firms necessarily don't need potentially global coverage, but large firms do. So there's a lot of shifting of resources, moving people around. Headcount growth has not stopped that, but the nature of that headcount growth is dramatically changing, and we'll get into that as well a little bit further on.
Yes, thank you, Ramon. So essentially that next slide gives you a good perspective across the three key geographical regions that we track and how the headcount is shifting and what vendors are doing across Americas, APAC, EMEA, and countries that we actually cover within the study. So there's three trends that we have identified that are going across the regions, and each of the trends is some examples across of each of the regions. The first trend is the vendors are shifting from low-cost hiring from Tier 1 cities to Tier 2 and Tier 3 cities. For example, Atos had opened a delivery center in Londrina, Brazil, replacing that center with Sao Paulo office. Which essentially, will help the firm to generate cost benefits and with the lower cost living in Tier 2 and Tier 3 cities. Second trend is also becoming an emerging trend, is we believe it's acquiring in low-cost locations. That trend is really highlighted in the APAC location in other low-cost. If you can see, there's an expansion, double-digit growth, and which was mainly supported by Accenture's inorganic activity in Bangladesh, and also Accenture's inorganic activity in China supported the double-digit growth in APAC. For overall, when we talk about acquiring, the real trend that we've seen is acquiring the right talent in low-cost locations that A, is going to provide cost benefits, and B, is going to provide capabilities. And the third trend is really the EMEA kind of stands out across between the two regions. It offers the dichotomy between the traditional SIs and India-centric vendors, while the SIs are constructing their onshore to restructure and to better to balance their delivery model. India-centric vendors are expanding in nearshore locations, onshore locations. As I mentioned earlier, in Central European, Eastern European countries like Poland and Hungary are standing out of the stack, and also vendors, SIs are looking actually in nearshore locations in more developed Africa economies such as Kenya and South Africa. So the next trend we want to talk about and we want to identify is the impact of cloud adoption across service lines and adoption of automation, and how is it impacting and hiring strategies. Essentially, the client shift it's really impacting in ITO. IT service outsourcing is a service line that we've seen that has been impacted the most. The chart on the next slide is, again, a representation of all the 14 services vendors, specifically for the IT outsourcing headcount, tracking the overall IT services headcount as well as onshore and offshore, local application. The two key trends that we have identified that are represented on that chart is A, the ITO headcount is really mirroring the overall headcount growth trajectory. in terms of deceleration, and the most important thing is that the ITO decline in onshore resources has been the largest of all the service lines that we track in the study. Overall, what we see, what we believe is happening in the IT outsourcing is that as that model becomes, the cloud adoption, automation, IT service delivery becomes more widespread, vendors are hiring fewer low skills and resources, and really seeking for the resources that are the right resources with the cloud expertise that will help them to deliver the services and adjust the delivery and adjust the cost benefits. The next slide is a little layer deeper. The slide before, picking up for the vendors that we have identified we've seen the most impact of IT outsourcing headcount shift. First and foremost, we see the headcount in IT outsourcing shift from onshore to local, kind of like piggybacking on the first slide, on the previous slide, for the overall trend, and see how the vendors are shifting they're expanding the share of low-cost resources for IT outsourcing. A, for getting the proper personnel, and B, for because cloud is such a small portion, they need more engagements, and they'll need to support those engagements with adding additional personnel. So that's kind of one of the first issue. The second part of on the right-hand side of the slide is we have identified different platforms and solutions that those vendors are actually using, and it's helping them to automate their service delivery, and it's helping them to become more competitive in the changing from cloud. For CSC, they are building and buying their infrastructure, cloud infrastructure outsourcing, and without adding additional headcount, they have launched the cloud compute infrastructure as a service, and they also build a service mesh agility platform that really helps them to adjust their staffing levels and really maintaining a private, hybrid, and public cloud offerings. IBM has expanded their infrastructure capabilities through soft layer framework and tools that really allow them to deliver and since the company is moving from a traditional legacy IT outsourcing towards the cloud business model, soft layers portfolio of tools and frameworks allow them to do that. For internal perspective, in terms of the way IBM manages their the way the employees and the resources in the company are collaborating, and for streamlining the process, they are leveraging the application assembly optimization. Moving down the stack, T-Systems expanded their portfolio capabilities through launch of the Process Cloud on the dynamic cloud platform. And Atos, while it didn't, the IT outsourcing headcount didn't really contract, pretty much remained flat. They added a few bodies, but they also are shifting in the similar direction as the other three vendors with the launch of Canopy and expanding the virtual desktop IS.
So what's interesting is that we're seeing platforms arising, we're seeing headcount declining. In a sense, we're seeing the IT outsourcing industry really changing. Traditionally, when you did IT outsourcing, you would have a number of clients that would want to outsource their IT functions and services. You needed dedicated people for each of those clients to execute and do that. The cloud market and the way the cloud delivery market works is you have one big data center and you outsource some of those services from, to one client from that same data center, from another. That's really where you have your multi-tenant situations. Then you can still have a big data center, but it can be partitioned and segregated and privately arranged so it only hosts that client's infrastructure and runs that client's infrastructure, unique and dedicated situation. From a staffing perspective, you do not necessarily need the same number of people, and that's really what we're seeing is impacting the IT outsourcing from a global delivery standpoint. And again, data centers have been consolidated. Virtualization has enabled that to happen. You do not need 200 data centers. You can have one, but you can virtualize it in 200 different platforms and 200 different solutions for 200 different clients. You don't have to staff, in 200 different locations. You only have to staff in one location. So there's synergies here. There's cost effectiveness here for the vendors. Clients expect to receive some of that cost effectiveness. So it's really to the benefit of both the vendors as well as the clients as we work through the cloud market, and we see this change occurring in IT outsourcing.
So the next chart really gives you a better perspective of who's succeeding in the strategies and how the IT outsourcing hiring levels are impacting the revenue per employee in the IT outsourcing service line. Interesting enough, out of the 4 vendors that we just had discussed the adoption and automation, only CSC saw a positive change in the revenue per employee. The rest saw a contraction, but I think it's what happens with the adoption curve with those 4 vendors, those 3 other vendors, is really they are shifting, and we'll start to see a positive trend expecting the revenue per employee. India-centric vendors on the other side are succeeding, and you can see they also a positive impact ahead with HCL, Infosys, and Cognizant. We believe that if the widespread leverage of low-cost resources and less labor-intensive IT outsourcing services enables India-centric vendors to achieve that positive change. However, one note is that India-centric vendors' revenue per employee is much smaller than the traditional MNCs and SIs for that comparison. Couple of examples to bring up of helping India-centric vendors is also the partnership with for Cognizant with IPsoft that allows them the automation, and also HCL's platforms like ILP, ASM, and iGovern that has helped them to implement that in the service delivery and help them to achieve that positive change. The next topic is, as the Ramunas mentioned, is to kind of highlight where our vendors are making money and how they're actually achieving that, and to address, since the adoption of cloud is changing the way vendors are hiring and the way it's impacting revenue, are they making money, and who's really making money, and what takes from a global delivery perspective for vendors to make money. The next slide kind of gives you a good snapshot of over 2 different trends: low cost leverage and operating margin, and what it takes for a vendor to have that positive impact, and which vendors are succeeding. So the overarching trend is the SIs are rebalancing their workforce structure, and while we saw Dell and HP to have a positive impact on the revenue, the operating margins decline despite the low-cost leverage and expanding in automation. They're going through massive restructuring and rebalancing, and that they have to bear that cost that impacted that profitability. An SI vendor, actually, that's really highlighted here in terms of a good leverage between automation and low-cost leverage is IBM, and they're really succeeding in the way of expanding low cost and going from low-cost perspective and implementing automation in the service delivery. What we believe is happening with IBM is really the ability to leverage their dual mandate of pairing the GBS and GBS unit capabilities. The GBS unit continued to infuse IP into the delivery, and the GTS unit had put a stake in the ground with expansion of soft layer and expansion of cloud data centers across the globe. So it's really a testament for IBM's shift in that direction, and we expect other vendors such as Accenture and HP, after completing the restructuring, to see that trend on their end and to have a positive impact on their profitability. On the right side, the India-centric vendors, they're kind of showing a little contrast, a little trend. Overall, they continue to expand, and while at lower pace, their low-cost leverage. Infosys saw there also improvement in the improvement profitability of Infosys. A key reason for Infosys we saw is their ongoing internal turmoil within the organization over the last 12 months, and actually declining and adding onshore resources, while the others, TCS and Cognizant and HCL, they continue to expand the onshore base, helping them to achieve higher value consulting engagements, essentially impacting the profitability. So the next slide it gives you a good snapshot of all the metrics that TBR trend what we keep an eye on here in terms of the global delivery perspective and all the metrics from adding headcount, attrition, utilization, operating margin, and pretty much trying to see, sum it up, all the metrics and what we expect to see where the operating margin could be versus the actual operating margin, what the vendors are reporting. What the key indicators we have identified as a success into a nonlinear model are, in terms of portfolios, vendors increase their platform-based solutions, and they're moving that services stack to high-value consulting. From a go-to-market perspective, vendors are changing to more aggressive pricing models as gains are passed to customers and value-based pricing models evolve. From a delivery perspective, it's a must. The vendors are investing, and we see that some of them are faster adopters than others in investment in tools and automation and cloud-enabled delivery, and also changing the business models and increasing investments in monetization of research and IP-based assets. Overall, for what margins are being influenced is, we can say, the market conditions, effective staff pyramid management, leverage of the industrialized delivery models, assets, tools, as well as IP-enabled platforms and platform-based solutions. Do you want to add something to that?
Well, I think what's interesting to note here is that, there's a lot of moving parts in regards to global delivery. Where are you getting resources, how well the resources are performing. This chart is a very simple representation, and yet we see in terms of profitability and operating margin that some firms are going up, some firms are going down. Certainly there are external factors that are in play. But the overall trend is that we definitely believe that headcount growth is not likely to be as fast as it has been in the past. That very first chart we showed, we had headcount growth in the 20% range, revenue growth also in that same range, and it was really an explosion of demand of IT resources for professional services firms. That definitely is changing, and the previous chart to this one, where we're looking at profitability, we're seeing that there are impacts on profitability. Certainly firms that are automating, leveraging IP, figuring out how to do things smarter and better, are requiring less resources, therefore they're improving their profitability as well as their revenue per employee. And it's going to be an ongoing trend because there's a little bit of a mix from that standpoint. Clients definitely want to receive IT services at a lower price point, but and as you integrate and commoditize the various services platforms as well, you end up being able to deliver at a lower price point. Yet you want to balance that against a profit perspective so that for all intents and purposes, you're not losing money, you're still making money. So it's a balancing act, and we also know that some of the firms are doing a very good balancing act by reinvesting some of their profits into further development of IP and automation tools. And I think this is, and across the board, we think everybody is doing this to one degree or another. Just certain firms are further ahead of the game while others are a little bit behind. So with that, we're going to open up the line for questions.
Great, thanks. And so as Ramunas said, we're going to open up the floor now to questions. So we had a couple come through. If there's folks out there that have questions, please do send them through now. The first question we have, guys, is you mentioned onshore headcount has been contracting across EMEA and the Americas. Are vendors changing the pyramid on their onshore workforce and relocating closer to clients?
Okay, I'll take that question. Thank you for saying it's over. So as I mentioned earlier, India-centric vendors are still playing catch-up, especially during the onshore presence in Europe and EMEA, and in Europe and the U.S. Through lateral hiring and B acquisitions. On the other hand, MNCs and pure SIs are becoming more selective of hiring on-site resources, as pointed out in the charts before. and they're rebalancing their workforce structure, that they'll be recruiting best-in-class cloud experts. That's the trend we see to support their cloud investments. We haven't tracked specifically if that shift, if the shift from specifically the onshore resources are positioned into nearshore locations, but it's certainly something that we keep an eye on, and a trend that could be identified down the road in the next iteration or so of the study.
Okay. The next question we have, you talked about how the adoption of cloud is shifting ITO hiring strategy. What are the trends across the other service lines?
Well, as I mentioned in the beginning of the presentation, the overall headcount will continue to decelerate. In terms of service line perspective, the trends are very similar. Specifically for, I think the one that's closest to ITO is the application outsourcing, because they're, as the adoption of automation really impacts the application outsourcing as a traditional legacy service line. The onshore headcount in the service line, while at lower rate than ITO, continue contracts as well, and the low-cost headcount decelerated about the same pace as the ITO. Down the stack, the BPO, I believe, looking at the numbers here, followed that movement. IT services vendors are increasingly adopting the business platform as a service in their service delivery offerings, especially when they're seeking benefits beyond the traditional cost takeout, which really impacts as well the BPO headcount. The CMS side, the traditional consulting system integration, I mean, the headcount did not contract in the service line. However, it's definitely for the overall trajectory. It decelerated both onshore and the low-cost bucket decelerated. I believe the India-centric vendors boost in onshore locations really supporting that onshore expansion within the CMS side.
Okay. We have one more question in queue right now, so if there are additional questions, please send them through at this time. Last question we have right now, guys, is what strategies are being leveraged to manage attrition?
It kind of ties up. It's a good question where what we see in terms of, as I mentioned earlier, who they're hiring and what's driving employees to jump from vendor to vendor. And what we've seen overall for the vendors is that attrition increased across low-cost, onshore, and overall attrition increased for the 14 vendors. The onshore increase, however, which was kind of expected, I believe, rose across 9 of the vendors, especially with the market conditions improving in mature markets. It allows the vendors, employees to jump for better opportunities. On the vendor perspective, what we see is that vendors are really seeking for the best personnel. There's definitely, we see a gap of the right skill personnel, so that's a challenge that a lot of them are facing, but the one that they already have in-house, they're trying to maintain and retain the employees through internal initiatives, better work environments, so they're cross-training, just to retain that staff. A couple examples that I can bring up top of my head. I know IBM, for example, they are using internal analytics program to maintain, to track rather employee satisfaction. That way, they try to keep the attrition lower than the industry average for the 14 vendors that we track. India-centric vendors have always been challenged, especially on the seasonal attrition trends with hiring, putting pressures on board versus lateral and vice versa. And we've seen some of them attrition spikes, and Cognizant was an example that kind of saw that trend towards the end of the first half of 2013 and tried to improve that trend. The second half implementing an initiative such as Fully Cognizant, and actually they saw an improvement in their attrition, climbing up 450 basis points.
Yeah, I think one of the interesting things about attrition is the fact that the cloud market is very confusing and complex. We've entered a stage in the IT arena where the interactions and how you leverage cloud delivery is something that's not simple to understand right off the top of your head. And as a consequence, skilled people are needed. Skilled people to explain how cloud works, And those skills have to be almost divergent. You need to explain it to line of business managers and people that are looking at cloud from that perspective and are considering it, as well as the IT departments themselves, and they get into the nitty-gritty details. And when you talk to the IT people within organizations and you're trying to deliver services from that standpoint, you have to talk the language there. So a skilled workforce and improving the skills of the workforce is paramount. And what we've seen in terms of our coverage of the various IT firms and our discussions with the firms, and we've definitely seen that people are being pilfered from one another. It's an ongoing trend. It's occurring across the whole chain. And it's not people just being pilfered from one IT vendor or service firm to another, but even companies themselves are actually trying to bring some of these people that they feel have a good understanding of what's happening in the marketplace with IT services and IT infrastructure into their own organizations. So enterprises are also grabbing off people. I mean, the biggest areas where we're seeing, high attrition are certainly in the BI and analytics space. Certainly, that's a hot topic area at a marketplace where there are not a lot of qualified people at the present time. So, firms are trying to train people. At the same time, they're trying to give them sufficient salaries not to leave. But yet, there's always another opportunity that pops up, and that's why the attrition rates are running at a higher level than they have in the past. And we suspect it's going to continue on for another at least year or two.
All right. So it doesn't look like there's any additional questions in queue. So if anyone does have any, please send them through now, and we'll try to address it in the next minute or so. So with that, I will begin to wrap up the presentation. So I want to thank the analysts for their presentation, and thanks all of you for joining us today. Excuse me. As I mentioned, I was going to share all the social media links with you. So I encourage everyone to follow Boz, Ramunas, and TBR here at the Twitter handles listed below, as well as joining our social media conversations on SlideShare, YouTube, and LinkedIn. We are sharing a lot of our free research there, and you can get access to the analysts ask questions and follow their opinions on matters from both global delivery as well as cloud and management consulting. As you're leaving the webinar, there's a short survey. We're trying to track how good you thought the presentation was, how valuable the presentation was, how good the presenters were, and if there's any additional open-ended comments you can give us in terms of topics you'd like to see more research on, presentation skills, what have you. That information is being used to improve our presentations quarter to quarter. I'm going to leave the chat function open for another couple of minutes in case there's any last-minute follow-ups or requests for information. We do have a few in queue that we're taking care of. And we look forward to seeing you guys all on upcoming webinars. We are scheduling them on professional cloud services customer research. Is that right?
One coming up on
There's
that.
one coming up on professional cloud customer research that you might be interested in.
There's a whole series.
Management consulting. So we will be sending out our next quarter's webinar schedule in the next week or so. So please keep an eye on your email, and we do hope to have you on webinars in the future. So thanks again, everyone. We'll be sending out the slides within the next 24 hours. And if you have any follow-up questions, please do send them through to either myself or to the analysts. Have a great afternoon.